Hi everyone, welcome back to this week Weekly Market Update. So as usual, uh, remember to follow my Facebook page, my YouTube, or join my Telegram as well. So in order to get the latest update as well. So let's start off with as usual what happened on last Friday. We can see that basically all the three majors benchmark closed green with Dow Jones close up to 450 points, and the remaining is also the same. I don't try to drag much on what happened last Friday because I believe you know. But ultimately, what causes it is might be because due to the financial stocks market, it actually rose whereby Federal Reserve announced that the bank could resume their buyback on the to buy back their shares and also to raise their dividends starting at the end of June. Even though it's a slightly delayed, but it still give more good news to the financial sector. And remember last week, if you follow my video, you should know that I mentioned that they actually do not wish to extend the SLA. I think it's the ratio, the lending ratio, right? But I think due to this, investors tend to be forgetful. They tend to enjoy as first. So I think due to this Fed new, increase of buying the dividends, buying back the shares, raise the dividends, right? Actually outweighed the decline of the SLR fear. All right, it's called the SLR fear. I'm so sorry, yeah. Uh, Supplementary lending ratio fear. So that's why, as you can see, couple of the financial shares like JPMorgan's, Bank of America, even the one that I pick up like Citigroup actually pick up as well. So we'll look at the chart later on the Citi group. So this is one of the news that actually make the market go up. All right, so we can see, all right, financial stocks buyback. So of course, this is one of the good news that caused the market go went higher. All right. So for the coming week, things to watch out is like non-farm payroll, unemployment rate, and also do take note. This Friday is actually this week is actually a short week. Friday is a good Friday, so it's a 4 trading days for this week only. All right. Beside that, try to move forward. What is the market concern right now? So first thing, if you follow the news, is the Swiss Canal, right? This big ship, Evergreen, actually blocked the Swiss Canal. This canal is very important canal for the import and export throughout the world. Um, Due to this, many goods is right now being delayed, causing commodity price to hike up, even for the oil price, for the natural gas, for those kind of commodities as well. And because if let's say this continue to block, right, then right now having a hard time to adjust, to rectify this issue. So if let's say it continue to block, it will take weeks, and then those boat behind this evergreen, right, will only have alternative to choose a route the whole world, will take weeks as well. So this will delay the supply, the commodity supply, causing the oil price to shoot up. So as I mentioned last week, oil price it should came down due to the fear of imposed from the Europe side of the restrictions, causing the demand to go down. But right now, the supply go down as well. So it cut off, it outweighed, caused the caused the oil to go up on last Friday as well. We'll look into the chart later. So another concern, people who are into Chinese company listed in US, take note, due to this US SEC begin to roll out their laws, right? Um, it caused a lot of Chinese company to came down over the last week itself. So they are actually trying to, this new law is called like holding foreign company on the accountable act. Basically that these Chinese listed shares, right, they need to report, follow the US side on their auditings lah, on their account reportings. So they need to show the names the board members are. It's just basically how they report lah. So if let's say this company, Chinese company, do not wish to follow, right, within the next 3 years, then they have to get unlisted in the exchange itself. So this actually causes the news, the big hoo-ha on the Chinese shares lah, and cause couple of shares to come down. We'll look at the chart as well later. All right, so you see Chinese listed stock tank on the fear of multiple dispute with US. So you see so many good Chinese shares, all is Chinese listed shares, right? All came down. Of course, it's not ultimately it's not the fundamental of the company. All right, it's their reporting whether they want to follow or not. All right. So is this whole holding foreign company accountable act? All right. So if let's say they follow, right, they will actually eventually go up. I mean, you would definitely bounce back, lah. So it's whether you believe the fundamental of the company or not. All right. Look at the chart later. Next thing, a lot of people say a lot of shares is be sold, Chinese shares, Chinese education shares, mainly is because due to large block trades involved by the investment banks such as like Goldman. Uh, so you can see that a lot of shares actually came down because actually Goldman, I think they sold uh sold, you see over here an email. Seems like Bloomberg say that Goldman sold 6.6 billion worth of Baidu, Tencent Music, this kind of shares, causing the market to came flush down on last Friday itself. So, but is there any fundamental change to the company? We're not sure. It might be due to people who actually invest through Goldman Sachs, right? They actually overexpose themselves to these kind of stocks when they are really at a cheap price. So they try to liquidate, try to change, try to move out from, or try to reduce a position. We never know what causes it, but ultimately, is the company any issue? I don't see any issue at the company, or is there any insider, which I also not very sure. So try to manage your risk as well. We'll look at the chart later. All right, so mystery block trade erased 3 billion. All right, we'll look at GSX. GSX is actually one of the education company as well. What causes this to come down beside the Chinese reportings? All right, um, also due to this, you see a lot of Chinese stocks came down, especially for GSX. We'll talk to you later more. I think it's because due to the Chinese government is actually putting new restriction on the online education. All right, they are actually trying to include a ban on online learnings for children's age 6 and under. So their online educations, of course, parents would like their children to learn from young, right? Especially when they are starting, at the age of 3, 4, 5, they want to learn those very easy, simple thing. But right now they can't. So they actually block the revenue for these online educations. And beside that, just to let you guys know, Chinese online education has been very competitive over there, all right, in China. So many new company, I think there's one new IPO company as well for online educations. So it's very competitive. Firstly, the restriction. Secondly, the reporting. Thirdly, all right, so it's also overpriced. I mean, if you look at the chart for the past few weeks to months, so I think it's just a pullback. But ultimately, if you want to be safe side, pick the right one. Pick the right one. I would suggest that you avoid GSX. After I wanted to pick them because they are really heavy, overly sold, but there are quite a bad news from GSX, so I'm looking at TAL or EDU. All right, next thing. Okay, so we know why Baidu, Tencent Music, iQIYI stocks all been selling off. All right, so there's a block sell, right, like I mentioned. So ultimately, as you can read that none of the four reported bad earnings. So it's not due to the fundamental of the company itself. All right, so it might be due to Goldman Sachs shopping around 10 billion shares block. Okay, so let's go into the chart itself. Right now, we are looking at Dow Jones Index. So what happened on Dow Jones Index? This is really chart. Let's go to daily chart. Right, in daily chart on the 14th March, I say that looking at 33,000. If you're able to close above, you are looking to 35,000, 33,500. Okay, it closed above 33,000. If it closed above, so on last Friday it closed above. So why I say that it closed above is because why I looking at 33,500 is because I'm using Fibonacci extensions. uh I draw a Fibonacci extensions. So 33,500 is actually my 161.8. Okay, it's basically 1618% of the next level. So this is where I'm looking for. Okay, so this is for Dow Jones Index. Next on Nasdaq. Nasdaq, I think I did mention couple of times. It need to break between these two levels. All right, it need to break 30,300, 12,500. So either side break will show a clear winner. Right now it's very range in between. So if you want, if you hit the top, sell, bottom, buy. So it's up to you. It's a sideways trading. All right. So not much big news to me. So there's Nasdaq. Next, we will be looking at. Let me take a look. All right. Oil. Just like I mentioned, oil, right? Oil. I think I mentioned last week. It's good apparently. Can you see? So this is on a day chart. So the video was recorded 5 days ago. So market candle start from here. Okay, start from this small little doji, and then it came down. It almost hit my first target at 57, just a few cents shy off. Then it actually turned sideways, up and down, up and down. So right now, last Friday came up due to the the canal, the canal being blocked lah by the evergreen. Okay, but ultimately, right, it's still below the moving average, right? It's still below the $63, the resistance. All right, it's still below that. So um we shall see. Right now it's depend on the supply already. Demand is definitely being locked by the Europe side, so I'm still kind of the bullish because I don't see any successful breakout from oil. So I'm still kind of like bear at the oil at this point of time. All right, so we'll look at 57, revisit. If let's say a break, then we'll go down to the next moving average support. Okay, so this is my stand for oil. And then for Citigroup, which I mentioned as well last week, yes, you can see. So it start off with Monday on this candle, came down, almost it spike up. All right. So what happened? As I said that Fed announcement, right? So right now this is a good announcement. It break higher, so it might actually revisit $76. But ultimately it still depend. So but as you can see from the major trend, like from Dow Jones is going up, so the overall market might pull the financial market up again. So take note, if you have shorted, remember to stick to your cut loss. If you have not, you want to short right now, it depend on how heavy the market react on this news. Okay, when we know that shares, company buy back their shares, it will definitely hike up the shares price. All right, so this is how it goes. Okay, next, I'm looking at Craft. Yes, mentioned last week. Finally, at last, I can say it broke off. The ascending triangle closed above 40. All right, I think it closed at 40, just nice at 40, but it closed above this 39.65, a resistance level. Yep, I'm still looking for the upside. My ultimate aim is 2042. All right, let's look at weekly chart. All right, so this is my ultimate aim. It's still at 42. So that okay, I'm still looking at 42. I believe it will reach there. All right, I believe you will reach there. Just a matter of times, right? Okay, next thing. We are looking at those affected Chinese company right now. Firstly, I will start with Baba because Baba are a significant support level. We can look at Baba at a longer period on the 21st or the 28th March, which is today. So there's a longer period of support. Firstly, based on Fibonacci, 68% cannot be broken. All right, 68, 61.8%. All right, cannot be broken. Or you can say it's 38.2. It's just the reverse, right? Cannot be broken. Once it broke below, close below this ascending triangle support, close below the 61.8%, right? The market will continue to come down. All right, just nice right now. Baba is actually seated on the 50% Fibonacci on a major support, the first support level. I can see that. All right, if everything is good, it should continue to go up. All right, if everything is good, it should continue to go up from here. It should bounce off, but it's how the market react on the new rules regulation from the US SEC. All right, so this is what we look. But Baba is definitely, I mean, if you believe this company, it should be a all the pullback, right, all the drop is actually for you to accumulate. People who did not pick up when it was $50 plus, return back to $100 plus. Right now, you return back again. If you still never pick up, I don't know when you are going to pick in Baba. All right. So ultimately, whether you trust Jack Ma or not. Okay. So next is on uh next company I'm looking at. Actually, it's basically the same. I mean, all these Chinese company, the chart is showing the same. There has been hike up for too high for the past few weeks. Okay, right now when we see this kind of major up pull up, right, major major run up, we always use a Fibonacci retracement to see where is the next retracement level for you to pick up. So people who believe in Baidu, the Chinese Google search engine, is this circle area is where I think that is a good accumulations. Of course, you don't buy, you don't whack all your war chest in a level. You can actually divide it, and when it slowly come down, you can slowly accumulate dollar averaging, right? So this is where I'm thinking a good price to dollar average until 141 or 140 being broke off. Then we are looking at so-called a little bit bearish at that point of time. So right now, to me, everything is just a pullback. They just stir news, to pull it back, pull back the price. But will it be significantly impact on the company? I don't think so. I think if let's say all these companies legit, they will definitely fulfill the accounting on the US side. Okay, so last Friday we can see high volume, sharp, but it didn't and carve the previous candle. So right now we are still stuck in between. I can't give any determination whether is it bullish or not at this point of time. I can only say that the good first support is 186 and then followed by slowly accumulations. Okay, so this is by 2. So next thing, uh, I'm looking at ITE. ITE is really being whacked badly. ITE. And the good thing is, it actually came back to the, hold on, it actually came back to the support level. Okay, it actually came back to the support level, touches. Can you see ITE is actually like a range, a sideways range, perfect sideways range since 2019. All right, up, down, or sideways range. So it actually touches last Friday, last week, basically, we are looking at a low of 1460. So 1450 is my ultimately the final support level. So if you break through, then it's not showing a good sign. But right now it touches 1460 and then it bounce back, close at last Friday, close at around 1743. All right, 1743. So this below is a range whereby you can, if you are believe in Chinese company, this is a range whereby you can catch, hopefully. Okay, so any bounce back is good to you. All right, but ultimately it's whether will they continue to be list or not, ITE. All right, so this is what we are looking at. Okay, for ITE, next we are looking at, I think on the Chinese education, just like I mentioned, try not to go into GSX. All right, GSX, can you see from $100+ just a few weeks only. All right, 1, 2, 3, 4 weeks, less than a month, it came down to $39. It's more than 50% discount. All right, why? You can look at what I wrote here. Fundamentally, avoid these shares because in 2020, Muddy Water, Greasy Research, City, Citrons, all say about these stocks is like so-called they actually do something bad on their reportings. All right, so you can see they actually inflate their financials by 70%. That means all the online user is fake account. So try to avoid a GSX. You want to pick a falling knife can. This is the level you should monitor closely. All right, it touches and then you pick up. It's good, but this is a risk trade. All right, there are so many like Baba, IT. This is all good company. You can pick it up from there. GSX is all on speculations. All right, but like I mentioned, Chinese education, if you prefer, EDU is good. Ultimately, all right, it still stay above 100-day moving average, so it's kind of like better than GSX. All right, it's just a pullback. To me, it's just a pullback. It's not overly so. It's not being whacked. All right, there's no double whammy here. Double whammy means bad news from the Chinese reporting, bad news on the Chinese online education from the China below 6 cannot restrictions. So all the Chinese education right now is facing a double whammy news. All right, so high volume of coming down. So I'm not going to enter any point on this time. I'm looking for better, a deeper pullback for me to pick up. All right, so but ultimately this company might be way better than the GSX. Okay, so this is whereby what the market is concerned at the moment. So hopefully it's a quick update for you guys. That's all for this week. Remember to continue to follow me for the latest update as well. Thank you. See you guys next week then. Bye bye.